In this video, I want to talk about one of the most popular day trading strategies or scalping strategies that there is. It's called the gap and go. And a lot of people like to do the gap and go strategy or the jump and run, whichever you want to call it. It's called both. But I want to talk about it in particular because what we're going to do is we're going to reverse engineer the gap and go. I'm going to show you the flaws within the way that most people do the gap and go, and then I'm going to show you how to fix those flaws, and then we're going to reverse engineer it, okay? Because wouldn't it be better if we could actually get in before the gap instead of after the gap? And we're going to show you how you can possibly do that with a different type of scanner. Now, the most popular way of trading the gap and go or the jump and run strategy is to go and find a scanner. And so a lot of people go to scanners and they'll find these little scanners. And okay, there's a lot of them all over the web. Almost every website has this type of a scanner. Now, here's bar chart. And you can come in here, and this has a little today's price surprises. And you click on little today's price surprises, and it comes up and it scans the market for you, and it tells you which markets have made big moves in the market. So you come over here and you got your little gap up here, and you click on it and you sort by gap up or gap down. And here we are, we've got our list of the biggest gappers. So this is up 54%, 35%, 26%, 17%. And so what day traders will do is they'll run in there and they'll start looking at these gap scanners, and they'll try and find markets that have gapped and then see if that's not got a catalyst to continue to move it a little bit higher, and they'll try and capture little pieces of these markets after they've gapped. So think about it percentage wise, okay? If you've got a stock that's trading at $3.18 and it's gapped up 54% versus one that's trading at $46 and it's gapped up 17%, which is the better trade? Plus, you got to take into consider volume, which ones have the best volume or lowest volume. What was the news that caused it to gap? Was it, where did the news come from? What was the news article that caused it to gap? There's all kinds of things you have to take into consideration. And so once you start trying to go off of gapping markets, you're kind of doing after the fact trading, right? You're doing after the fact research. You're trying to find out why a market gapped, not that it's going to gap. And so I'm going to show you how to solve this problem. We're going to reverse engineer it, and I'm going to show you how you can use a different type of scanner to give you better results than a gap scanner, and also give you a reverse engineer, tell you the possibility that a stock is going to gap before it does. Okay, wouldn't that be better, knowing that a stock is going to gap tomorrow as opposed to it already gapped? Now we're going to try and squeeze out the last few little pieces of this gap. Now remember, gaps were meant to be filled. There's that saying in the industry, gaps were meant to be filled. And so oftentimes these markets will jump up and gap up like that, and then they'll just fall right back down into the gap and fill the gap. And so there's not a lot of catalyst to push these things forward when you do the gap and go strategy, where a market hasn't really got a lot of a catalyst or momentum to push it higher. So we need to find markets that not only have big gaps for one reason or another, we need to find markets that have a big strong catalyst to possibly continue pushing them higher as well. And I want to show you and introduce you to the scanner that I use. It's called NewsMiner. Now, this is a great little scanner because you can use it for gap and go if you want. If that's your strategy and you want to do the gap and go stuff, you can use gap and go. But this is also NewsMiner. I'm going to go ahead and hit dig now and let that go because it takes just a few minutes. Because what it's doing is it actually goes out and it scans all the news for us. It's not scanning for markets that have already gapped. It's scanning for markets that are going to gap. All right? It's scanning for markets that are going to gap. Isn't that what's cool? Let's let this scan. It takes a few minutes, and I'll come back when it's done with the list, and I'll show you the results of NewsMiner. Okay, it's done. It's got our list, and I want to show you what's really cool about this. What it's done in the list is you'll notice it's got no gap percentages. NewsMiner is not looking at charts to tell you which markets have already gapped. It doesn't pay any attention to the chart at all. It doesn't even look at price. What it does is it goes out and it scans the entire internet and all the different search engines and all the different search news engines, and it tries to find out which markets are in play, which ones have lots of articles about them. Because that's what's going to move the markets, right? Not one article or one article here or one article there or some news thing that caused one stock to blast out, into space for one reason or another. These are big catalyst markets. These are markets that every news agency, every service out there that writes news is writing about. So we're going to come down and take a look at this, and it tells you right here. Hey, we found this company called Welltower, and it has 47 articles written about it today. How about News Service? Service Now, it has 38 articles. How about Wisdom Tree? It has 38 articles. Not one article, not two articles. It has 47 articles written about this stock. All right, now we're talking. Now we're talking about some serious catalysts that's going to move these markets and make them jump and run. And you can run this scanner at any time and have it update the number of articles that are out there and popular. I like to run these things not in the morning after the market's already jumped and run. I like to run it in the evening. And I like to put in some orders into the market, into some of these hot stocks the night before, because it's the night before that these things jump and run, right? I mean, this thing is going to run tomorrow. It jumped. I don't want to be getting into it after the fact. I want to know what the market's going to do before it jumps and runs. So I can run a scanner just, an hour before the market closes, start looking through some different stocks in there, see what's hot and bothered in there, what's getting lots of articles, and then I can then either, put in some positions and anticipate a big gap in the morning, or I can wait until the morning has actually come, see if it actually did gap, and then have my nice catalyst markets, not ones that are just taken off of some gap scanner that says, oh, this one gapped up a lot. I've actually got articles, 47 articles saying that this market is in play, and it gapped, and so I can do either strategy. I can either try and capture the gap by putting in an order the night before, or I can wait for it to have a big gap, and then I can play the gap just like I would if I was looking at some other gap scanner, but I've got a better gap scanner, one that is telling me 47 articles are writing about this stock, not just one or two. So now we come in here, and let's go down through the list. Now, first of all, I just grabbed off of NewsMiner, I just grabbed the top ones in here. Now, I want to show you something. There's some in here that aren't good stocks. Obviously, it's not looking at the chart market, so it doesn't know which ones are great stocks and which ones aren't. We have to kind of go down and open up each one and take a look at it. But what you can do with NewsMiner is you can just double click on some of these and it'll pull up the chart in here for you, and you can get a kind of a quick view of what's going on. Plus, it gives you the news for the day, all the news, and you can come down and see which news articles and where they're coming from, which news agencies are supplying us with 47 different articles on this particular stock. And we can come in and come back. Let's look at another one. Here's Costco. We can pull up Costco, and so there's Costco. We can come back and there's another good one, Procter & Gamble. We double click on that one and we pull up Procter & Gamble. And again, there's Netflix. We can pull up Netflix and take a look at that one. And so we can see all the news on all these different stocks that are coming up as these big search stocks, okay, as these big news item headlines. So now I've come through and I've just typed in some of the ones out of that list, the top list, and I'm just going to come down through them. You can see Boeing was in that top list, had 20 articles written about it yesterday. So Boeing had a big gap. Now, if you could have, anticipated and you'd pick up the gap, that's a much bigger profit, right? The gap, than it is trying to say, well, it already gapped, and I'm going to try and capture this last little piece right in here after the gap. Either way, you can do it either way. That's the great thing about using NewsMiner as your gap scanner. Here's another one. Here's Key. So Key was on the list. Key was on there this morning, and this was a nice big gap mover, and it even had the nice catalyst that continued up right after the gap. This is another thing that the scalpers love to see. They love to see the gap and go. That's why they call it the gap and go, because it gaps up and then it goes higher, and then they get in and ride this thing higher. So then also another popular strategy in gap and go is watch the market to fall back down, pull back into the lower region, and then when it starts to rally once again, they'll get back in for the next run up. Okay. So the pullback and then the next rally, and this is a perfect little example of that type of a strategy. Of course, we're using the bulls and bears on this. You can see when the market changes from bullish to bearish and then goes back to bullish once again, you get in and just follow the color coding of the red, yellow, and green, and it can help you know when the market's changing from bullish to bearish. And then, of course, let's go to the next one. This is Service, and this is Now, N-O-W. And, of course, it gapped up big, and if we look at our scanner, of course, you can see it had 38 articles on it today. So it's one of the hot popular ones, and of course it gapped up big, 38 articles, and it had a nice big run and a big continuation of that nice trend, the gap and go, and up it went. And then if we go on to the next one, here's Out, another nice big beautiful gap. Now the problem here, again, the gap and go, right? Gap and then it didn't go. Why? Because gaps were meant to be filled. And so what does it do? It just turns right around after gaps and comes right back down. Now, wouldn't it have been much nicer to be in right here, knowing that this market was going to gap because it had, what? 82 different articles or whatever, 32, 28 different articles are being written about it yesterday and published, and so that's what caused the market to gap and run. So now we can come through. What's the next one? Schumburger, same thing. We had all kinds of articles written about it. It showed up in our NewsMiner scan, showing that it was in play. Lots and lots of news media was writing about this stock, of course, so that caused it to gap. And then, man, the gap and go on this one was amazing, wasn't it? So gap and go, and up that thing ran. Where do we get out once it goes up? Well, it's very easy to know where to get out when you have a gap and go trade, because you follow the blue lights. And when the blue lights get up there and it crosses back over the blue lights, that's where it's time to get out and take your profits right here. There's your exit point. So you get in on the open of the gap and go, up it goes, come right back down, get out right there. That's a quick scalp. That's what a lot of scalpers do, a lot of day traders like to do. They like to do the gap and go, and they'll come in there, and that's 100 shares at $63. If you'd have bought 1,000 shares at $63, that's a real popular strategy. Again, we're using the bulls and bears. You can see when the price bears turn green, red, yellows, neutral, and then of course we get the next rally for the pullback and the next rally up, and away the thing goes once again. And so this is a nice gap and go strategy using NewsMiner to find the better stocks, not just the markets that are gapping, but the markets that are gapping with a whole bunch of articles from lots of different news sources, people who are actually talking about these stocks. T came up in this thing. Now, AT&T, another great stock. We get all the articles coming in being written about it here. The next day, what does it do? Gaps like mad. It does a little tiny gap and go, runs up a little bit, but then what? Oh, well, it hits the blue lights right at the same place for basically where everybody's getting in, get you back out the scratch trade. Wouldn't it have been great had you been able to get in and know that this market was going to run based on the number of articles that were published about it down here and capture that big move, as opposed to waiting until after it already gapped? Now, that's not such a bad move. If we come in here and we go to another one that had a lot of, that was our number one scanner, wasn't it? Right there on the top. 47 articles written about Welltower. 47, it was the number one on the list. So we come in here and look at this gap. Nice big gapper right in here. Came up, gapped up. Nice big move in this market. It gapped and ran a little bit. Came up, pulled back, rallied one more time, and then it started to pull back. Gaps were meant to be filled, so it's starting to drift back lower. A very common pattern that we see in these gap markets. They run up, and then they turn around and they drift back down all the way into the close of the market. And so this is a very common pattern that we see all the time. It would be much better if we could come in with NewsMiner, anticipate the gap, maybe pick up some of these things. We're not going to risk a whole lot, right? They're very talked about. Of course, we want to look at the news and see if it's good news, right? We don't want to have bad news show up on these scanners and have a whole bunch of articles written and end up having a gap down. So we want to be making sure that we're getting positive news and that we're getting a gap up. Okay, so that's Welltower. That was the number one on the list. And again, if we draw our dollar calculator in there just for fun, that gap was $121. Oh, that was $121 per 100 shares. Of course, it's a little bit larger stock, $47. And the nice thing is, if the news is positive, you know, the chances of the market actually falling is going to be pretty slim. So it's not a big risk, and the upside potential, the gap ups on these things, really nice. So that's kind of just a quick way of looking at a new tool for you, NewsMiner, to do some of your gap and go and actually reverse engineer your gap and go. And even if you don't want to reverse engineer, you don't want to try and jump in the night before with all the positive news and you want to wait for the gap, these are the markets that are going to be the best ones for gap and go. They're going to go up, and then usually what I've seen in my experience is that because they have such a strong catalyst behind them, once they do gap, they do continue in the trend for a good little gap and go run after the market opens. All right, and that's just a quick review of a great little scanning tool called NewsMiner. And of course, you can find more information about NewsMiner over at www.toolsfortraders.org. Toolsfortraders.org.